Good evening, or good weekend, I should say. This is Ira Epstein with your SPDR ETF Stock Market Weekly Edition recap, and this is for the week ending Friday, May 5th. Cinco de Mayo, by the way. Happy Cinco de Mayo to all, 2023. Would you have thought you're going to get a blowout number in jobs? Market was looking for a decline to 180,000. Instead, it comes up into the 240s, and they do some revisionments of the other numbers. They take the unemployment to 3.4%. I don't remember when it was 3.4%, ever. That's pretty strange. Super strong. Jobs galore. If you want a job, you can get it. Wage inflation, it's moving up a little, but not like it was. Don't go in and start asking your boss for a raise because you're probably not going to get it. He can hire somebody else other than you. Do they want to? No. Why? Productivity. You know your job. Now he's got to train somebody, go through all that. And it's never the same. People don't understand. There is a cost to a revolving door, and it comes down to the word productivity. It takes probably 6 months in most positions to get somebody proficient at what they're doing for the way the company wants it done. Some people can walk from company A to B and they're doing the same job and they're proficient. Okay, but even that's a bit of a learning curve because nothing's identical. So today we look at the market, and I saw the number, and the first thing I thought was the stock market would fall. That proved to be erroneous, a bad error. The good news is I don't believe in going through major reports. You had two major reports this week. You had the Fed. They went up a quarter point. And everybody, everywhere in the news, everywhere is saying, the Fed's opened the door to a pause. I didn't hear that from the Fed chair. I'm hearing it from the people on TV, not the Fed chair. They are data dependent, and they said they will keep going until they beat the beast down. Nothing the Fed chair said a pause. Find me it in when they did it. In fact, he said it was never brought up for discussion. Why are all the announcers on TV talking that way? Because that's what people want them to say. It's what it is. The announcers are only as good. They get rated. If you have a bad announcer and the ratings drop when his show comes on, you'll notice he's gone and they put another guy in the slot. That time slot doesn't change. The name of the show will change. It'll basically be on financial TV, the same type of show. Just a prettier face or an uglier face or a different personality. But to a person, there was nothing that the Fed chair said on a pause. I want to go on record saying that. Nothing. Number two, this report today, to me, took cement, put it around the Fed's feet, and you cemented them in place. Now they cannot pivot in June to a neutral stance, neutral, not a decline. It's going to be later. And of course, the Fed watch people, they're all over that. If you go to the CME group, now they're all saying, September, you're not only going to be going flat, you're going to get your declines this year. I see none of that. For that to happen, I'm going to repeat, we need an economic catastrophe of some type. We've bordered one, you know that, with the banks, okay? I mean, that got close, no question about it. Had it gotten worse, the bank would have paused. Not a rate hike, not a decline, by the way, would have gone into a pause mode. They wouldn't have panicked and just gone, we're going to have to lower rates to protect everything. It doesn't work that way. I was watching today, at the end of the day, this is just fascinating, Bloomberg. And it was, I'm going to say 5:30, the show where they give the roundup, Wall Street Week. And they brought on Louis Rukeyser, who I had the fortune to meet and love the guy, brilliant. To make a long story short, they brought up, and here he is talking, we had 750 bank failures this year. We have 17 cents in the FDIC against each $100. I'm listening to all this and going, this could be today. It was brilliant what they played. Absolutely brilliant. I'm fully in agreement with what they're saying. That is how it's working right now. So as I look at it and I just let it play out, I'm going, we're back to that part. So let's talk about the big job gain, why the market went up. The market went up because people are saying, not that interest rates have to stay up longer. They're saying the economy's that strong. It doesn't matter if the Fed keeps another quarter point or not. The economy can absorb it and it's going to keep going up. That's what the naysayers are buying into. All right. When you look at TLT, which is the iShares of the 20-plus year Treasury bond, what is this market doing? Well, that's the weekly bar. And let me see if I can bring it in. There we go. And with the swing line, you have lower highs, lower lows. The trend is down until the market gets back up and over 107.24. Where's the market going to? What do I teach you with this red line on the charts if you've been a regular viewer? The red line represents the 18-week moving average, the line in the sand. That's your demarcation point. When you close above it, you should have a bullish bias, under it a bearish. The market finished at 104.89. The 18-day average is 105.29. For the second time in 3 weeks, you're back under it. I think the bears are at work, seeing where they can drive the market. Where can they drive it? Well, if we look at the Bollinger Band, it's 101.39. That's pretty far away. So I'm not convinced this market's got it in it to suddenly drop. That's a pretty dramatic drop, $3. On the other hand, why not? That's what the work says. So that number's going to climb a little bit, this 101.39. You can see the trajectory of the Bollinger Band has been up, so it's going to climb a bit. Let's say it's near 102. I can live with that. So until the market gets over 107.24, who do I think's in control? The bears. Where's the momentum in the market? Just turning down. I think the bears grabbed control. I am looking for that market to fall. I would be wrong in my analysis if prices got over 107.24, but that would not turn me bullish because you'd have a lower low, higher high. When we look at Schwab, ugly. Not even getting out of its own way here. Why? Because in order for them to keep deposits, they're going to have to pay more. If you pay more, their profitability is going to drop down. I'm talking more. You give me your money, you leave it in your account instead of paying 0.37, 1 point, 2 points. You can go out and get 5 points in money markets, right? Or close to it. That's one of the reasons this is in big trouble, all right? If they want to, the profitability goes. I am not saying this company's in financial ruin or anything. I am saying if you own it and you didn't get out of it, you got a lot of ruin on your landscape, and it'll probably stay that way until we know where the peak is on this interest rate story, where the banking crisis really comes to an end. Don't buy into anything that today's rally in the bank indexes was all of a sudden a bottom and the market's gotten better. Speaking of that, KRE. This is your S&P Regional Banking ETF. You think that looks like a bottom? If you do, don't watch this show anymore, because this is a downtrend. When it ends, it ends. You've even got an embedded reading. It tells me on good rallies, what are the pros going to do? I think they're going to sell short. I think they'll get out when the red line closes over 21, and until then, they're aggressive on the short side, looking to see if they can hit that Bollinger Band again. KBE, what does this look like? Not a trend. Higher high, lower low, but a washout. That's the lowest we've been. Do you think this problem's gone away? The smart money doesn't think so. Do we have an embedded reading? Embedded is when these numbers line up and they stay under 20 for at least 3 sessions in a row. Let's see if I can get this. It doesn't want to do it. I believe you've got it with this week. I'm sorry. I'm going to try one more time and see if it'll do it. There it is. So we know here both numbers under 20. Here, both numbers under 20, that's the second week. That's the third, not the week before. That tells me that on rallies, the pros want to be aggressive in selling this market. On XLI, this is the resistance area. Now, the problem in being short this market has been this. The market's trying to find support between the 100-week average and the 18. The trend is down because you have lower highs, lower lows, but it's not grabbing any traction yet. If it grabs it, you drop, I think, to 96.43. If you negate this downtrend, and it is a downtrend, to do so, you got to get over 101.70, and I think on a weekly basis, the bears still control the market. When we come to XLE, you have a higher high, lower low. Now, do you know how to work with Bollinger Bands? That's what these black bands are. Do you know how to work with them? If you don't, with this, you are at a big disadvantage. I want to trade against you one-on-one, over and over, until you learn that. And the reason is you're going to get the most bearish down here. You're going to get the most bullish up here. I promise you the news of the day is all super bearish there. It's all super bullish here. But the chart action is the key. You're either an investor or a trader. Which one? You can't be both on the chart at the same time. It's nice to think that. That means every time you buy as a trader and the market goes against you, you decide this. You know something, I'm not going to take a loss on that. I know the chart's no good. I want to own it anyways. And then 3 months later, you look at your portfolio and you go, boy, that was one crazy move. Every now and then, you're also going to say, hey, what a good move that was. Look at how this thing's exploded. I would have been out, not back in, and the market took off. I'm sorry. I've learned the hard way for me that the two are not the same. You either enter it as an investment or you enter it as a trade, and you don't mix the two. When we come over to FXE, so now the market's at a crucial spot. It's back up now and fighting between the 100-week average for the first times. It's been there now 5 weeks or 4 weeks in a row, and the Bollinger Band. Momentum is overbought, not embedded yet, so you got to be careful right there, but bullish. In GLD, overbought. What do you think I'd be telling you up there? Ira was here. Where is Ira? Oh, there he is. There he is. Ira was telling you that gold was a crowded trade. Go back, please. Go on YouTube 3-4 days. Take a look at what I was saying. And now you're getting the correction. So is this market in the areas to be a buyer? Well, join me in my morning subscriber videos that's where I can say buy and sell. I make you a promise. Today I had recommendations in GDX and GLD. I am not going to tell you if they got filled. I'm not going to tell you if they were buy or sell. You want to see? Join me in the morning subscriber video. Overbought into the Bollinger Band. Got to be a bit cautious right there. Now Tesla. All the Tesla for me has done is it's still bearish. You heard me, bearish. The resistance is here, the 18-week average, right up to the 200. I think the pros are selling it short, stops over that level, and still looking to see how low it can go. If it stops them out, it stops them out. But I think the bears have control of that market. By the way, they came out today, Tesla. I love it. Were you ever in the Tesla plaid? I had the privilege 7 months ago, 8 months ago, of one of my friends has one. So he came, I was next door, literally next door to where I live, and it's my friend's brother, and he says, Ira, have you been in one? I said, no. I said, I'd love to. He says, it's parked outside. I said, what? He offered me to drive it. I said, no. I've never driven anything that fast, and if I do it, I want an open space. I've driven race cars. I know what I'm doing. I don't trust it until I've driven it on an open road. He didn't. On a city street. If you've ever been in one, it's like a roller coaster. You've never been that fast. At least I have never been that fast. I imagine a dragster is like that. And now they have put out the racing package for another $15,000 to $20,000. They've taken off the limiters. Now you can go over 200 miles an hour. They've finally given it the right brakes. A car with over 1,000 horsepower needs the right brakes, but it's a $15,000 add-on, just so you know. I say it because I love it. Okay, AMC, I am friendly. Now, I am the guy that, is praying movie theaters make it, but I am also the guy that owned one. So I speak from experience. This is the time of the year you make your money. You don't make your money when the kids go back to school. So now that the kids are coming out of school, the big movies are going to come out. The popcorn sales, the candy, the Cokes, the Pepsis, they're all going to get sold. They make their money. I wish they'd listen to me and take movies that are approaching 2 hours long and give them an intermission. Let the people go to the bathrooms and let them buy more candy. They'll make even more money. Please, somebody listen. It makes sense. In any case, until you get back under these lows here, I can make an argument you're going back to the $6.50 mark. I want to see it survive. Apple, come on, the earnings were not stellar. The 14 came back to life, thank God, but there's going to be now the watch has got all its new upgrades, a bigger watch, I understand. I keep reading about it, but they're doing poorly with the MacBooks and some of the other products. The market doesn't care. The market wants to own Apple. It's been this way since the beginning of the year. Take a look. You had been under the 18-week average. That means the bias was down. At the beginning of the year, right here, you got over, you've never been under that. So you've had a bullish bias all the way through on a weekly chart. Targets, upper Bollinger Bands, back away, that's it. And is the market a buy? Absolutely the way I teach Bollinger Bands and slow stochastics, as long as you don't get that red line back under 79. I'm not going to tell you where to buy, but the momentum is saying buy. TLT is still on a short side. You'd have to get back over 107.24 on a weekly chart to tell me now you can't be short anymore. The door is open for the lower Bollinger Band, and that's where we come to the end of that. So, by the way, this is how my charts start off. I always wanted to show you this. In the mornings, they're all dark. And I start adding all my studies just the way you're seeing. We're going to discuss more moving averages that you're seeing here, the Bollinger Bands, the slow stochastics, and I put it all together. But to get an understanding, you got to learn. What does that Bollinger Band and the slow stochastic do? I want you to learn it. Invest in yourself, not in me. If you take a look right after this, here's the ad on how to do it. It's, I think, 15 chapters. You get the charting software. You get the morning subscriber videos for both spiders and ETFs thrown in. You will master this course in 3 days, not hours a day, okay? Nothing like that. And it's going to stick with you, I think. If you're one that likes to learn technical studies, I think it's going to stick. So take a look at this and make the right investment in who? In yourself. I'm Ira Epstein. You take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.